Got the Steves, by the way.
Got to be skeptical on
Steve
that.
Cortez, Steve Moore standing by. Steve Cortez, you basically called this. You called for a miss on the jobs number. Dow futures off 84 points right now. Your reaction?
So, yeah, Sandra, I said 150. I was off by 1,000. This is my lucky day. I'm going to buy some scratch-off lottery tickets when I leave the studio. But, look, no, I think as far as the market goes, again, I do think the market's actually going to bounce on this. It's not right now. We'll see. It's early in the session. But I think also it's important to note, you know, when we talk about this being a good report, that's ridiculous. This job market and this economy right now, they are not worthy of America. When I started working as an intern on Wall Street back in the late 1980s, we would get jobs numbers that were 4, 5, 600,000 a month. That is a recovery, and we are a much smaller country then, by the way. So this idea of 2% wage growth, maybe 2% GDP growth, maybe 1%, and jobs numbers 200 and below, that is not real growth. It's unacceptable. Unfortunately, I think it's going to continue for the rest of this year, though.
All right, so, and Steve Moore, hourly wages. A lot of people were looking at wages here as a potentially even bigger number to watch than the jobs added. Wages went up 2.5% in the past 12 months.
So a couple of things. I mean, first of all, given the state of the world economy, which is just turmoil, you know, 150,000 jobs isn't a great report, but it sure is a lot better. I'm sounding like Barack Obama right now, but it sure is a lot better than what's happening in the rest of the world. So there is a kind of admirable resiliency to American companies that they're able to weather this storm. I said this last month. I'm going to say it again. It's an obvious point, but sometimes we forget it. The jobs report is a lagging indicator. The economy is slowing down. So think about it this way, Sandra. We went from about almost 300,000 jobs last month to now we're down to 150. I think we're going to be lower than that in February. This economy is slowing down. There's no question about it. That manufacturing job number is surprising to me. I'll give you an amazing statistic. I was talking to some of the folks in Texas who were involved in the oil patch, and they're predicting, just to give you an indication of what Charles talked about, how much this is hurting that industry, they're expecting in Texas alone as many as 35,000 layoffs in the oil industry as a result of these low oil prices. That's this year.
So I'm hearing a lot of skepticism, and I'm seeing that on social media as well. Tweet us your thoughts at Sandra Smith Fox. Charles Payne is on there as well. A lot of people saying they don't really believe that headline unemployment number at 4.9%. And I think a lot of that, Charles,
I don't believe it for 1 second.
And I think a lot of that skepticism falls into, Charles, what you talk about on your show all the time. What good is it if people just don't feel good right now and they're not spending?
Right. And I think we also, you know what, the 62.7% rate, we always talk about this being the highest, you know, the lowest rather since the late 70s. People need to be reminded, too, that number in the 70s was going up.
That's the labor participation.
Right, the labor, that number was going up. That number was actually rocketing. I mean, it doesn't even begin to sort of illustrate what the real pessimism in its nature. Now, I will tell you one thing that resonates a lot on social media and with a lot of Americans is how many of these jobs are part-time, how many are full-time. People get really upset when we talk about these jobs numbers and we don't break it down because in their lives, they used to have a full-time job, now they got a part-time job, and they see somebody on TV say things are great.
Yeah, and Charles, you know, to that.
That's a great
Charles,
point,
to that point on labor
The
participation.
one thing about the Fed is that, you know, the Fed said they're going to be data dependent. You know, so you look at this report, and I said it was kind of in line with expectations, but there's nothing here that tells you the Fed needs to go out and raise rates in March.
To hike rates in March on this number? No way.
Steve Cortez, go ahead.
To that point on labor participation, Charles, I think you're right. It's so much worse than the headlines. For men, it's at an all-time low because a lot of the industries that are dominated by male workers have had such a severe, they haven't had a recovery from the recession and are still sitting at lows. So I think you're right. It's far more gloomy out there than a lot of folks on Wall Street might realize.
So the dollar has turned higher against a lot of global currencies, including the euro and the yen on this report. I'm just wondering if that is the, not to get wonky here, but is that the currency market, the U.S. dollar, predicting that this is a solid enough report for another Federal Reserve
I'm really
rate
shocked.
hike?
I'm shocked at yields, bond yields in the dollar so far, and the fact that the market's slightly down. I thought we'd be higher on this kind of a miss.
So that's showing that most global currencies right now are down against the
initial
US
reaction,
dollar. Yeah, initially.
Well, a lot of things going on there. First of all, I can't believe that that's actually pricing in a March increase. Maybe the dollar is strengthening and the 10-year is rising because
people are saying, oh, wow, maybe there'll be one rate hike later on in the fall or something like that. I would push back a little bit on the labor force participation comparison to the 70s and 80s. Huge numbers of women coming into the workforce for the first time, and the baby boomer generation. The demographics in those years were the bulk of the workforce was at the most productive ages. Now we're seeing this bubble in the population is late 50s, early 60s.
Although in the last couple of years, Jack, there's only one age demographic where labor participation has gone up, and that's 55 plus. If you look at labor participation for young Americans, it has fallen like a rock, and that speaks to the optimism or lack of optimism people have in the American dream.
Yeah, there's a,
it also speaks to the, Charles is right. If you look at the labor force participation rate, it goes like this. The older you are, the higher the labor force participation. And the reason that's important, by the way, in terms of our future economy, is that when you're looking at, people in their 20s, mid-20s, or even late 20s that don't have a job, that's going to affect their productivity and their wages, Charles, not just now, but 5, 10, 15 years down the line.
Yeah, I agree, Steve. And it's also the millennials, they're at home, they're not participating. Women aren't making enough money. They're saying, hey, I'd rather stay home. So it's not just the baby boomers. It's really across the board, all the generations.
That's why I think that Bernie Sanders got 84% of the 17 to 29-year-old vote in Iowa.
Yeah.
All right. Well, that's because they're in college. They don't have jobs.
All right, guys, thank you for all of your live reaction. Please